All right, if you're a business owner, an entrepreneur, or a 1099 contractor, this is for you. We're about to break down the mortgage playbook that was actually built for the way you really make money. Let's dive in. Does this sound painfully familiar? Your business is crushing it, you know the money's there, but when you go to get a home loan, you get hit with a frustrating no. I'm telling you, you are not alone. It's an incredibly common problem. But here's the thing. What if the problem isn't you or your business? What if the problem is the banking system itself? We're going to show you a strategy that basically sidesteps those old, outdated rules and looks at your true financial picture. And that brings us to what I call the entrepreneur's dilemma. It's this crazy paradox that trips up so many successful people. You're absolutely winning at business, but somehow you're losing the mortgage game. How does that even happen? Well, think about how you were in a smart business. Your CPA doing their job tells you to write off that new equipment, deduct all your business mileage, and reinvest your profits back into the company to fuel growth. And you know what? They're totally right. That's a brilliant tax strategy. So then you take all that success, you walk into a bank to apply for a mortgage, and suddenly the system sees all those smart business moves as huge red flags. The very things that make you a savvy business owner somehow make you look unqualified on paper. It's maddening. So what is the root cause of this whole mess? It's something we call the tax return trap. You see, the conventional lending world, it's just built on a model that was never, ever designed for modern entrepreneurs. In this slide right here, it shows the disconnect perfectly. In reality, your business might have, say, $250,000 in actual cash flow. But after all those smart, strategic write-offs, your taxable income, which is the only number most lenders will look at, is just a tiny fraction of that. So here's the most important thing to get. You don't have an income problem. You have a structure problem. The financial system you're trying to play in wasn't built to understand you. Let me break it down. See, most standard loans, the ones backed by Fannie Mae and Freddie Mac, are legally required to use your tax returns to figure out your income. So that means every single smart write-off you take actively works against you, lowering the income you can qualify with. And that money you reinvested to grow, yeah, that often doesn't count either. Your CPA is doing a fantastic job saving you money on taxes, but that exact same strategy is torpedoing your mortgage approval. But what if you could just bypass that tax return trap completely? Well, you can. So let's talk about the solution, a type of loan that was designed from the ground up specifically for business owners. It's called a bank statement loan, and the concept is brilliantly simple. Instead of looking at your net income after all the deductions, this loan qualifies you based on the actual cash flowing into your business, the deposits, over 12 or 24 months. It looks at what you really make. And this isn't some weird workaround. It's a purpose-built tool. If you're an S-Corp or LLC owner, a 1099 contractor, a real estate investor, basically if your financial life doesn't fit neatly on a W-2, this was made for you. It's designed to recognize how you actually earn a living. Now, whenever we start talking about non-traditional loans, a bunch of myths and misconceptions always seem to pop up. So let's just clear the air right now and separate the fact from the fiction. Let's just bust these myths one by one. Myth 1, it's a last resort loan. No, it's actually a strategic tool for financially strong borrowers. Myth 2, it's for people with bad credit. Wrong again. It's for prime borrowers who just don't fit the conventional income box. And myth 3, it's the same as stated income. Absolutely not. These loans require heavy documentation of your deposits to prove your real cash flow. Let me be crystal clear on this because it's so important. These are not subprime loans. They are for prime borrowers. In fact, many of the business owners who use these are financially stronger than your average W-2 employee. They just don't show that strength on a standard tax return. So the tool exists, which is great, but a tool is only as good as the person using it, right? Just knowing this loan exists isn't enough. The single biggest factor for success is having the right expert guiding you through the process. We're talking about a strategy, not just a product. A true specialist just has a different mindset. They're not just a paper pusher, they're your financial navigator. Their expertise is in solving exactly these kinds of complex problems that don't fit into the standard little boxes. And here is the hidden trap. A lot of lenders have heard of these loans. They might even say, oh yeah, we do those. But they only dabble in them. They don't live and breathe the nuances, and that's why so many business owners get told no, even when a yes is totally possible. The lender just doesn't know how to put the file together correctly for an approval. A specialist, on the other hand, follows a proven playbook. First, they actually analyze your true cash flow from your statements. Then they match you with the right lender because they know all the specific internal rules, the overlays, that each bank has. After that, they meticulously structure your file to tell the strongest story. And finally, they act as your translator to underwriting, explaining your financial situation in a language the bank can understand and approve. So here's the bottom line. A generalist pushes a rate sheet at you. A specialist builds a custom solution for you. It's a huge difference in approach, and honestly, it's the difference between another frustrating denial and a successful closing. So, I'll leave you with this one big question to chew on. Your CPA is helping you optimize your taxes, and that's great. But is that same smart business playbook unintentionally blocking you from your biggest life goals, like actually buying the house you've been working so hard for? Because at the end of the day, to get from denied to holding the keys to your new home, you don't just need a different type of loan. You need a different type of advisor. Someone who specializes in your world, who gets financial complexity, and who knows how to make the system finally work for you, not against you.